Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And like we said, today we're going to be talking to you guys about how to get started in infinite banking and avoid some very common mistakes. Anthony, I don't know about you, but I am very excited to get into this podcast because there are mistakes that we see over and over and over and over again.
And you know what? Those mistakes do not have to be. I mean, there's some easy things that you can do so you can avoid those mistakes. And that's what we're going to share here in the podcast. And also at the end, we're going to give you a checklist that can help you go through to find out, to make sure you're starting IBC on the right foot.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad, along with Nelson Nash's infinite banking concept.
Cameron, why do you think there's so many people that start IBC in the wrong way?
One of the reasons that people get started along IBC in the wrong way has to do with policy structure, right? If you start infinite banking with a poor policy structure, you are in trouble before you even get started. And what ends up happening, specifically what I'm talking about, is that if you have the wrong design, there's going to be many years where you don't have any cash value and you're literally standing on the sidelines, missing opportunities along the way. Much like Anthony at a high school dance, you're sitting on the sidelines, twiddling your thumbs, watching these opportunities pass you by. So we don't want to be like Anthony. We want to get out of the gate, make sure we got a properly designed policy. Anthony, what about you, man? Any reasons why?
Well, let me just piggyback on that or just comment, Cameron. Dude, in high school, I was twiddling my thumbs, seeing those opportunities go by. But the story ended pretty well. Just started a little rocky in high school. But you know what? If that's how your IBC journey starts as well, where you're on the sidelines, you don't have the cash value, you're seeing these opportunities go by, don't worry. I'm really glad that you're here, and we're going to show you some ways to avoid that, even if you already started down the wrong path. But another why I think, Cameron, is people get paralysis by over analysis. I mean, there's a lot of data with looking at an illustration. It's different. So your friends are doing something different. So it makes it just adds another layer of complexity in order to start this on the right foot.
I agree, and to be honest, I admit if I were to get started today, I may run into analysis by paralysis. I remember when I got started years ago, there wasn't hardly any information that was out there. I went to Barnes and Noble and bought a few books that maybe had a chapter or two that referenced infinite banking, but now, right, we've got podcasts, we've got websites, we've got a whole bunch of different resources available for you guys. So, Anthony, let's take a look at what some of these common mistakes are. What do you see a common mistake being that people run into?
A common mistake I see is people hear about the concept. Maybe they read the book by R. Nelson Nash, Becoming Your Own Banker. They want to get started and they don't know where to go. So typically they're going to go to their inner circle, which may be their traditional financial planner or possibly somebody who's sells more of the traditional life insurance. Meaning it's starting with somebody who is not experienced and educated in implementing infinite banking.
Well said, Anthony. A prime example is I had a gentleman reach out to us. This was just a couple weeks ago. Started the conversation and he quickly said, "Hey, I've got a policy. I just don't know how to use it." Right. And so one, that tells me that who he went to probably doesn't know what they're doing on the setup, and two, they certainly aren't helping on implementation. And so I looked at the policy, I had him send it to me, and I immediately went to the policy overview page and I scrolled down, Anthony, and I saw base premium, I saw waiver of premium rider, and I saw chronic illness rider. Do you know what was missing?
The most important rider?
Exactly, PUAs, right? So that takes us to our next point, as one of the common mistakes that people make is they put too much base premium and not enough PUAs. So guys, if you're brand new to this strategy, right, and you're getting started, a couple words that you need to know. One is going to be base premium, and the other one's going to be PUA. That is going to help you understand policy design tremendously. Base premium, what we communicate to clients, is going to be the insurance portion of a policy. The first couple of years, you don't get too much cash value from that, but by that third, fourth year, you should be getting, almost dollar for dollar. So you put $1 into base premium, you have $1 showing up in cash value. The other feature is going to be the paid up additions rider, and that should be dollar for dollar from the get-go. You put $1 of into PUA, you're going to have roughly $1 of cash value available to you. And so when you start a policy on infinite banking, is we want a majority of the premiums going to the paid up additions rider, which is going to thus create as much cash value as we possibly can. Traditional infinite banking designs is going to be probably a 60-40 split, meaning 40% base premium, 60% PUA. Honestly, most of my policies that I issue end up being around 30% base premium, 70% PUA. For a number of reasons, I will go through and walk someone through kind of the design of it. And then what I communicate to them is that we want to have a little room for a buffer. And so that 70-30 split gives us immediate cash value, gives us great long-term growth, and provides us a little bit of buffer so that we can grow into the policy.
Well said, Cameron.
Thanks. Fasta, what about you? What's another reason that people are making some common mistakes?
I think that they don't truly understand how the loans work.
Good one. And what do you mean by that?
I mean, too many people are under the impression that by taking a loan, that is going to increase their cash value. The only thing that increases your cash value is premiums and dividends. It's additional money going into the policy. Loan repayments just replenish what you had leverage against it. It is not going to make it bigger. And Cameron, how many times have you seen people where they take loans really for no reason, and they're have that anticipation where they don't have to pay it back?
Often, many times. Unfortunately, there are individuals in this space that are communicating that as a strategy, that infinite banking is literally just taking a loan and that's all you got to do. That couldn't be the farthest thing from the truth. So I have had people come in, I think I've shared it on the podcast, that believe that it's, the magic is in the loans, and that's not the case.
Well, in fact, I spoke with a client last week, and what he was advised by an agent was, and suppose his agent was doing this every year, or maybe after the anniversary, he'd take a max loan and put it in a bank account. And then he would use that, when it was readily available, when he was ready to deploy it. I didn't understand the value of that. I mean, you take that loan out, it's still earning interest. I mean, your cash value is still growing, which is an important piece. But when you take a loan out, you have to pay interest. And if it's just sitting there in a bank account, it's not earning anything. And if anything, there's a tendency for it to be misused, right? Or we end up kind of using it for maybe a purpose that we didn't intend to. What I've also seen is people aren't paying the loans back, and sometimes aren't even paying the interest.
Great point. Great point.
And with our view is your policy is a holding tank in between opportunities. Opportunity comes, we want you to deploy the money. And if you have that money, you have a lot of opportunities, then keep it working. I mean, we don't need it to sit in the policy only when it's resting. So during that time, we need to be deploying the money and not be afraid to do it. But maybe we're not paying it back, but it's because the loans or that money is working for us. And so, but if we don't have a job or an in-between opportunities, we got to set it somewhere. So we should put it into stored in the policy. But one thing we always encourage our clients to do at a minimum is to pay the interest for two reasons. For one, that interest can be tax deductible, but only if you pay it. So if you don't pay it, you don't get the tax deduction.
That's crazy.
Also, ideally, one of the many great things about using these policy loans is there is no fixed repayment. So if you're unable to pay the interest, nothing terrible is going to happen. All they're going to do is just add it to the loan. Okay. The downside is now we're paying interest on interest, which is not ideal. But if you're in a difficult situation, we need to typically make difficult solutions. So to me, it's nice to have that ability. I don't need to pay the interest, but ideally, if you could, we want you to get the tax deduction. And so the interest is not accumulating additional interest.
I think I'm going to throw something else in there. Is oftentimes I'll see people will come to us from other places, right, from other agencies, and they haven't been repaying the loans. And I don't put all the responsibility on them. I put the responsibility, majority of it is going to be on their coach or their advisors, because people don't know what they're doing when they first get started. So if you guys are out there and you haven't taken a loan yet, one of the things that we always ask our clients to do is when you initiate that first loan is to call us. We'll walk you through requesting that loan. You don't have to. Most of the time you can do this over the phone, but call us. We'll help you administer that loan. And then we're also going to help you set up some sort of loan request or some sort of loan repayment, right? It's not that it's got to be cumbersome, but we do need to address that right away and make sure that we get in the habit of addressing that loan repayment schedule. Do you wish you could finance all of your investments with your rewards credit card? Just imagine all the traveling that you could do with those miles.
Well, since they won't accept a credit card for a down payment on a rental property, you can do the next best thing, and you can finance your investments by using the infinite banking concept. And imagine all the traveling you could do with all that tax-free cash flow by just adding one extra step to your investing process.
You can learn more by scheduling a free 15-minute discovery call with Anthony or myself. The link will be in the show notes. And now back to the podcast.
Awesome. Well done, Cameron. Cameron, what are some other common mistakes that you see people make?
Yeah, we alluded to this earlier when I was talking about base and PUA, but one of the common mistakes that people make is they only pay the base premium. They aren't making payments towards the PUA. Oftentimes this happens when clients will set up a policy and they start the base premium on some sort of monthly billing mode. Yeah. And they set the PUA to an annual payment. So maybe they don't have the cash right now. Maybe they don't want to pay it right now, but they're going to get to it at some date, right? Well, that get to it at some date is open-ended, and you look up pretty quickly and you've hit your first year policy anniversary. And number one, you don't have any cash value because you haven't paid any PUAs. And so one of the things that you want to make sure is that early on, the PUAs are going to be driving the cash value of that policy. And so you want to pay those as soon and max out the ability to pay those PUAs really in every year, if possible.
Cameron, what I like about that is that we have that flexibility. Whatever you determine you want to put in your policy every year, we do have that flexibility where you don't need to fund the entire amount. But yeah. I'm with you. I've seen people who we only pay that base premium. And like you said earlier, if we only pay that, we're really not seeing cash value till year 4. That's why it's the importance of putting those PUAs in, particularly early.
Mm-hmm. Well said. Awesome. All right, Anthony, as somebody's out there, right, they're moving forward, how, or if they are looking at options, I guess, to fund a policy, what are maybe some red flags that these guys should be looking out for?
I tell you, for me, the first red flag I'll be looking for is if somebody's pushing you to start underwriting before you've been properly educated.
Why do you say that, Anthony?
Is because I think IBC isn't a product, it's a process. So if they're focusing on selling you a product without teaching you how to use it and to make sure that you understand it and that this is going to suit your personal goals, they're putting the cart before the horse. And to me, that's a sign that they're focused more on the commissions, not on helping you implement infinite banking.
Well said. Again, I'm going to add my 2 cents here is you and I talk about this is we have many clients that have found us because they've gone through other people's process and they were pushed to start underwriting and they had no clue on infinite banking or how underwriting works or the insurance piece. And so their comfort level was very low. They stepped back, found somebody else. Guys, if you're out there and you're looking to figure this thing out, jump in our calendar. We'll walk you through an education process prior to ever suggesting that even start underwriting. So again, we're going to make sure that you guys are educated.
So Cam, what's another red flag that you would see?
Another red flag that I would see is if there is no conversation about policy design and or how you see yourself using the cash value of the loans. So early on, one of the things that you want to identify is going to be opportunities that you want to go after, right? Hey, I want to buy rental property this year in the next 12 months. Great. We're going to need probably 20 to 25,000 plus a little bit of a cushion to be able to take that money out and be able to make a down payment on a rental property. And so that helps us get an idea of policy design and making sure that the policy that we put in place is going to be adequate and suit somebody's goals and needs. The other thing, again, I'm going to harp on this, is the policy design. I can't tell you the number of times that I've met with somebody and I've asked them, hey, have you been able to go through and look at an illustration before? Man, everybody says no. They've seen a few of them online. And so we'll take the time to go through and show them exactly how we're going to build a policy. We'll go through the base premium and the commitment that they have to make every year. And then we'll also go through the PUAs and the flexibility they have. Again, we want to make sure that they understand how that policy design works, also how it parlays into them achieving their goals, and make sure it's something that's comfortable for them. So again, if nobody's talking to you guys about policy design or what you plan on using it for, that's a big red flag for us. Anthony, what's another red flag for you?
Well, I'm going to go back to what I said earlier, is that infinite banking is a process, not a product. So we need to make sure that whoever you're working with is going to be there to help you implement infinite banking, because this is a lot more service than either your term policies, or you have traditional whole life, or even if you have a traditional financial planner. There's a lot more service that goes into it. How are you going to process a loan? Are they going to help you with that? What about the repayment? Are they going to give you some ideas of how to use a policy? Are they going to be there to say, hey, Cameron, you're still in the P's? And still in the P's is a reference to becoming your own banker, where you're not paying yourself back. A good coach is going to hold you accountable.
Well said. Well said.
You got any more red flags, Cam?
Yeah, one that comes to mind is if somebody's out there and they're promoting that loans do not need to be repaid, that's a big red flag. For me, that is one of the surefire ways to really ruin infinite banking. I usually share people, hey, there's 2 ways that you can ruin this. One is by getting into a policy that's too big to start with, because then it becomes a burden. The other one is the one that I'm referencing here, is that if we just take the loans, right, and we have no strategy for any sort of loan repayment schedule, and then you've got the advisor that's suggesting that you do that and promoting that, that's a terrible idea. Big red flag. Not only walk away from them, but run away from someone that's making that recommendation. Vassal, what about you?
Well, I tell you what, a big red flag should be if somebody who is saying they're going to help you with infinite banking and they're not going to use whole life, meaning they're going to use another type of life insurance, kind of indexed universal life or variable universal life. The big difference is those are contingent on the performance of the market, and there is a chance your cash value can be higher. There's also a chance the policy could end up imploding. So
Yeah.
with infinite banking, Nelson was very clear of only using whole life. And believe me, I had a VUL policy on me and all the members of my family. It sounded great. And they told me they called it a rich man's Roth, right? Because a Roth, there's income limits, but you have some of the benefits of the Roth, but you don't have to worry about the income limits. It sounded great until it wasn't. And then we really saw the impact when the market tanked and the additional fees in there. But if somebody is truly promoting infinite banking, they're going to use whole life. And if they're using another product, I would be very careful. Well, I would run away is what I would say. And if you have questions about IULs, again, we're going to point you back to our our website, where on the top we have resources. And then there's under there is why we do not like IULs. And don't just take our word for it. We have white papers in there. We have some calculators and some illustrations and even warnings from the state of New York of using a IUL. So if somebody is promoting an IUL, that to me is a red flag for infinite banking.
Well said, Anthony. That's probably one of the biggest, probably the biggest red flag. Guys, if you're out there and you're listening to this, right, as we've been beating on some of these red flags, if you feel like you may have one of these red flags, right? Somebody's that not helping you, maybe a bad policy design, nobody's helping you implement infinite banking. The best thing that you can do is reach out to us. And the reason that I say that is because if you have a policy that was not originated for infinite banking, it's not like it's a done deal, right? We can come in and we can help you. There's an option that we will often implement when somebody comes to us with a policy that's not quite right, or that did not originate for infinite banking, is we can do a 1035. And so sometimes we'll take the cash value and we'll just move it laterally into a policy that is designed appropriately for cash value. And so don't feel like, it's the end of the world. There are some options for you. So I suggest you guys reach out to us, have us take a look at it, and we'll give you our honest opinion.
Anthony, Cam, I'm sorry, go ahead.
No, I was done. Go ahead.
I'm working on the case right now with the exact same thing. They had learned about infinite banking, went to the guy who sold them their life insurance. It was a mutual insurance company, but it wasn't designed fully for infinite banking. And now fast forward 3 years, they're upset that they put all this money into this policy and have very little cash value. And then what we did that 1035, rolled that cash value over to an infinite banking policy, which gave them a little kickstart to start creating that cash value. But now they saw the huge difference. They have cash value literally from day one. They can start using it. And again, that's the importance of the design. That is going to start with finding an agent. Great place to look for an agent is the Nelson Nash Institute. Has a list of agents all around the country that are certified in infinite banking, meaning they have passed a test. They have met with the board of the Nelson Nash Institute, and they have taken a code of ethics to make sure that they're implementing infinite banking in the way that Nelson Nash had envisioned.
Well said, Anthony. Guys, if you're out there, and like I said, we've got some options for you. So what we would suggest that you guys do now is one of two things. One is, if you want more information, or if you'd like this podcast maybe in a PDF, go to our website, infinitewealthconsultants.com. Go to the resources section, and up in that section, we're going to have an IBC setup checklist for you. That way, you guys get started on the right foot, and we don't make some of the mistakes that we often see. So again, that's going to be free resources up there for you. That way you guys can get started. The other one is, by all means, feel free to reach out to us. Anthony and myself would love to sit down with you, go through whatever policies you may have, make sure that they're appropriate. And if they are, great, then we'll give you some suggestions on how to use those. But if they're not, we can certainly do our best to make sure that we save those and get them directed towards a policy that's going to be best suited for you guys.
And I'm going to throw one more little resource in there. We created a video of the top 5 questions you should ask your IBC agent. So we took the liberty to answer those questions ourselves, but we will put that in the show notes as well. And if infinite banking can be a great strategy, it's important to start on the right foot. And we have a lot of resources to help you there. And we want to be a part of your infinite banking journey.
Great. Well said.
Go make it a fantastic day.
Take care, guys.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.